that one has actually seen a good surprise, 15 basis points higher on a year-on-year basis. So let's put the spotlight on the earnings to understand what exactly worked for the bank in the quarter gone by. We have Mr. Salee Nair, who is the MD and CEO at Tamilnad Mercantile Bank, joining us on the show right now. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And in an environment, actually, when you have the banks that are reporting their moderation in the NIMs, you have actually registered an uptick of more than about 10 basis points when I talk about your NIMs. Can you help us understand what actually led to the uptick and how should we see the NIMs for your banks, for your bank in particular, going ahead?
See, one of the advantages that we had is we have a substantial off-balance sheet item. This is an off-balance sheet item, what we call the advances under collection, right? Technically written off. We had a small recovery there, which beyond the principal actually impacted the interest. I think it came to about 14 or so crores, which added a few basis points. Other than that, if you look at our own advances yield, that has moved up 25. I just give you a color of that. Our advances yield went up 25 basis, 10.47% against 10.22%. That's a substantial increase. Whereas our deposits, cost of deposits was contained at about 14 basis points. And year on year, it was in fact 12 basis points. You know, from 5.78, it moved up to 5.90. Whereas our advance yield on advances went up from 10.19% to 10.47%. In fact, in the quarter itself, it went from 10.22 to 10.47%. So a combination of this, where we contained the deposit cost and where we had an add-on in benefit from the yield on advances, contributed to the net interest income going up.
Right. Talking about your RAM, that is your retail, agri and the MSME segments, that is now about 92% of your book. This segment also creates opportunities for fee income. So going ahead, if you could explain to us, what is your strategy when you talk about in terms of your loan mix? We believe you also have recently roped in McKinsey for the growth in the MSME sector. So if you could shed some light on that.
Absolutely, absolutely. I think we did have a bit of a bad phase earlier, a few years back, on the corporate segment. So it has been a conscious decision to sort of contain the corporate segment and contain it at around 90%. I think it's currently at about 10%. And the retail segment, or the RAM segment, as we call it, right, the retail, agri, and the MSME is currently at 92%. So I think that's a fairly good number for us, and particularly from a credit cost perspective and a credit NPA perspective, it's a good number. So this is something that we will continue to focus on. And within the RAM segment itself, now we are trying to bring focus back into the MSME sector. And like you mentioned, we did rope in a consultant to help us with that. And substantial projects are underway. It's the whole the credit architecture is being redrawn. What we are also trying to do is get the credit out of the branches and into centralized setups, where we can substantially increase the skill set of people handling it. So that redrawing of the credit architecture is on. I think the results, the impact of that will be seen in the coming few quarters. I think certainly I think it will be in place by the 1st of April, where we will entirely have the staffing pattern and some of the technology requirements in place. And while simultaneously, like I said, we are already at 92% on the RAM portfolio, that the retail, agri, and the MSME. So we will also now start looking at the lower end of the corporate segment as well, without going overboard on the ticket size. So both, I think, should impact the credit growth going forward. I think 12.59 is what we have delivered so far in the first year, this current year, on a year-on-year basis. I think current year, I think we should be looking at something like 13%. But going forward, once the redrawn credit architecture is in place, we look to see a substantial increase in the uptick in substantial increase in the credit portfolio.
Right. That's about your credit portfolio, but let's talk about your asset quality, because that's also one area that we've actually seen an improvement when you talk about your asset quality. Your SMA book actually reduced by about 140 basis points, while on the other hand, we've seen some of the banks actually facing issues when you talk about the unsecured segment, right? Could you quantify your exposure to the unsecured segment, and also what are the trends that you are actually witnessing within your banks?
See, one of the advantages that we have is that when you ask me to quantify the unsecured, it's very, very difficult for me to do that because I practically don't have any. This bank has kept away from the unsecured advances. And that perhaps is one of the reasons where it is also impacting the credit, the NPAs and the SMAs that we see as it stands. The NPA has come down sharply, as you've just mentioned, 1.70%. It is down to 1.37%. It's a creditable achievement. And simultaneously, we have also looked at our net NPA position and the PCR position, right? And that has moved up to 66.4%, a clear 25% over, what was it last year. And this is not taking into account the technical return of it. This is PCR on the book that we have on the book. And coming back to your unsecured, like I said, it's practically less than 1%. So any impact that the market sees on unsecured and the consequent, slippages or the stress setting in the unsecured is something that happily TMP would not be subjected to.
Right. Let's specifically talk about what's exactly happening when you talk about the rural area, right? We are seeing a recovery in the rural growth. There's also, we wanted to understand what sort of a level are you seeing that sort of a recovery trickle in your loan book growth? Can we expect from bank some growth coming in on that particular front, given the fact that we're seeing rural recovery, and especially if you talk about your MSME segment?
The MSME, like I said, it is slightly subdued at the moment for us because we are engaged in the redrawing of the map. So there is a transition pain that we are taking in. So currently it is subdued, but going forward, at least in the current year, we don't see a significant uptick happening because we have to get the skilling in place. We have to get the appraisal systems in place. I think that the focus in the current year is on those aspects. So in the current year, I don't see much of an uptick happening. Maybe it'll be significantly less than 10%. But come next year, once the redrawn architecture, the credit architecture in place, we are looking at growing substantially higher than 15%.
Right. Let's talk about your advances and deposits then. While your advances growth actually remains strong, there was some weakness seen in the deposit growth. And actually, we've seen deposit growth being a concern for banks as well. So going ahead, what's your strategy in order to gain momentum when you talk particularly about deposits?
I did mention earlier that one of the focus areas for us is to get credit out of the branches, right? Because in a typical branch, there's a substantial amount of time being spent on credit, with the result that we are not seeing them move into the market to canvas for or get those deposits. So the credit is being, like I said, the credit architecture is being redrawn, it is being centralized, it is being moved out of the branches. With the result, hopefully the branches would be freed of that. I mean, when you remove the credit, there's a lot of ancillary functions that also gets removed. So this frees up the branch for focusing on the deposits. And we are also looking at getting a certain amount of feet on street to support the branches. And we are also looking not only at that, we have just got someone, a consultant in to seriously look at the gaps we have in our digital offering, our internet banking, our mobile banking, etc. We would like to have it sharply strengthened over it, so that the customers are provided the conveniences that they deserve. So along with the redrawing of, the freeing of the branches, substantial strengthening of our digital products, we hope, we will muscle our way back into the deposit franchise. And we are going to see, I can't put a number now unless we take these projects, we see the projects take roots. But we are going to see a substantially higher growth in the deposits in the quarters going forward.
Right. And lastly, you did touch upon the deposit growth. And one of the most important factors for augmented your deposit growth would be branch expansion. If you could just shed some light on what sort of plan or strategy you have when you talk about branch expansion for Tamilnad Mercantile Bank.
I think we are already on the job there, and the target for the current year is 40, opening 40 branches. We have already opened 14 branches, and 25 branches are in the anvil, and hopefully before the year end, we would also have those branches opened. We are simultaneously looking at strengthening our presence outside Tamil Nadu, and towards that, we are looking at hiring. I think. Around 170 people from outside Tamil Nadu to strengthen the branch network there. I see twofold benefit from that. The existing staff, largely from Tamil-based staff, can be brought back into Tamil Nadu to strengthen the presence here, as well as we get a local connect. So that is something that we will complete it before the year end. Like I said, 40 branches would be up and running. For the additional branches would be up and running before the year end.
All right, then all the very best for that, sir. Thank you so much for joining us in ET Now to talk about the